sum. And the thing is, if you got a mortgage loan, the difference to a normal loan is the loss given default. With each loan, you have a probability that the customer might not pay. The difference from a mortgage loan is, if you would not pay, you would still have the real estate. You would have the security right over an immovable property, and you could get the money out from the real estate. Which means, if you want that, and if it should be appropriate for the cover pool, this mitigation should always be there. Such a mortgage, such a security right must be enforceable. Otherwise, your whole calculation would be absolutely disastrous, and you would lose a lot of money. And this is, if you say the customer would have a probability of default of 2%, still you would assume that you probably would get back 60 or 70 or 80% of the money. So it's a difference between 2% and 0.3 or 4. And this can be quite a lot of money. So you are obliged to verify if your mortgages are effective and enforceable, and you should be certain by law that this is the case. And this is also the case with supervisory law. We now in Europe have, in the European Union, have the CRR, the credit requirements regulations, which tell you under which conditions you can, among many other things, they tell you what are the requirements to regard a loan as a mortgage loan, with the consequence that you need much less equity than for another loan, depending on your internal methods, how to calculate it. And the other thing is the Pfandbrief banks, which are dependent on covered bonds, and for them there's the Pfandbrief Act, which tells them that they need a mortgage, and a mortgage that means two things. That means the loan and the security right. Both of them must be there. And in fact, today we see that the CRR are coming much closer to the Pfandbrief Act and the requirements for Pfandbrief banks than that has been the case with the former legislations of the European Union and of international legislations. Still, we do not know in detail how far that goes, but many banks are not aware of that still, and they see some surprises if this will be audited. Then, what do we need to fulfill these requirements? We must be sure that we have this entitlement to satisfy the loan by realizing the encumbered property. The mortgage must be enforceable. That means really enforceable, not just as an idea, but you must have the chance to do it. And that must be the case before insolvency, and what is much more difficult if the customer would be in insolvency and bankruptcy. And this mortgage must be permanent. It must not be contingent on something or limited in time, and you shouldn't have any private rights you cannot assess. You must have an assessable value, otherwise you cannot calculate. And it must be effective against third parties. But of course, you should be flexible. Now, if you look to that, we have to look to more than 40 jurisdictions. Of course, we can look to the dogmatics of the law. That doesn't bring us very far, we have found. We have very different structures of what you would call a mortgage, a security right. We have liens and pledges in continental Europe, or title transfers in many US states, or fiduciary transfers in Japan or South America. And in the end, you find out that the consequences are very similar. And for example, in the US, it's not very, there is almost no difference if this is title state, what they call it, or the deed of trust state. The legal consequences may be just in the same structures. So we find we have really to look to the details. The same applies to accessory rights versus non-accessory rights, very important for German lawyers who've always learned the difference between a hypothek and a Grundschuld. If we analyze it in many countries, we find out it's gradual, and there are some cases where you have accessoriness, some cases where you don't have it. So we have to look into details. How do we do it? We try to meet people from a number of countries, and we do it twice a year in a workshop with always the same people. and we try to find questions which apply to all of those countries. Not so easy, everybody has this idea what the right question should be. You have to really then talk to discuss it until you find it. And then you should have a number of questions, not so much, not one answers, not an answer for everyone, but a close number of answers which should give you an overview. And then you can compare it and you may have surprising insights. And we've done that since 2005. And we are up now to, this still says 126, we are now up to the 135 questions. Different slides, like this one. And here I would then come to the practical question I would like to demonstrate. A very important question for a bank: from what point in time can you really be sure that you got a security right over the real property and that you can calculate your loan as a mortgage loan? This is not the case if you agreed with the customer that you should have a mortgage, of course not. The mortgage must be created, it must be registered, and that could take some time. Of course, you should be sure in most jurisdictions, or in almost all jurisdictions, that your mortgage is there as soon as it has been registered. That can take some time, however. Just a few days in Norway or Denmark or the Netherlands. In Germany, it may be more time. And then I think we got a problem in Ireland, I have been told, because there's a practical problem with the new IT system. Yeah.
But still, it's part of the pressing outcome for Germany, I would think.
Yeah, well, it's a guess, of course. It's not really a juridical question.
Direction,
yeah, we are going in a good direction. It's more and more IT based. The other thing is Germany wants a full check before it is registered. Other countries just register anything which comes out. Yeah. So that is much quicker, of course, and both methods have their advantages and disadvantages. Then afterwards you can be more secure in Germany. But what do we do until this is registered? We can, of course, say we register, we agree with the customer to register it very early, even if we do not have even agreed on the loan. And you will see this could be, in fact, be a method in all those countries where you have the black color. In those countries you could do it. You not will do it very often because the customer will not be willing to register a mortgage for you if you've not even agreed on the loan. But that could make the process quicker. The other thing is you have to look, of course, for the ranking and to be sure that if it's registered, you rank in the right time. One of the issues is if you rank by time of the registration or to the lodging, to just giving the application to the registry office. And as you see, some countries, like the black ones, just look for the application. Nice method, because then we know today we lodged it there and now we are pretty sure about the rank. Germany does not, but the registration officer should make sure that it goes by the lodging. And then some other countries, there's a date of registration, like Scotland, like the Netherlands, which means you have to check afterwards that it has been really registered, and just the application doesn't help you. And then, of course, you can say we got the registration, but we can create the security right even before, which is the case in France, but that doesn't give you a rank. And then we come up with the question which comes out to be the most important one. Have we secured that we have our rank even in insolvency? And then it comes out that insolvency is a different story. Insolvency depends on when does the insolvency take effect. If you got your mortgage and it comes to insolvency, must it be registered? And then we got those countries like Germany where the important date is the opening of the insolvency proceedings, which means that can have taken a few days earlier. And but there are also countries where, like England, where it's even the application for solvency proceedings. That could be dangerous, but then if you look what status must the mortgage have achieved, we see in England it's just enough that you sign the documents for the mortgage, and that must have been earlier than the application for the insolvency proceedings. In Germany, it's just the priority notice or the application for the mortgage that must have been filed. And then we have a problem in those countries which are yellow, where the registration must have been completed at the time when insolvency begins, which means yeah, you should be pretty sure and check about insolvency before you can really be sure that you got the mortgage, in principle. Then, second thing, I'll do that short. What must the bank verify when acquiring a mortgage? And this depends, of course, on the land register. You must check what is in the land register. And then you've got those countries, in principle, where you've got a registration of rights, as in Germany and other countries where they have collection of documents. And all right, let's skip that. And then, of course, if you know that there's something registered, it might be the case that it has not been the true owner, the one you have found in the register. That could be, of course, disastrous if it would be important that the true owner has given you the mortgage. And there are two kinds of countries. In the red countries, it's important that the real owner has agreed to the mortgage. In the black countries, you can rely on the register. Important thing to know, which means in the red countries, you should have a certain check on the register contents and look through the formal transactions that everything went well. In France, then, for example, this is done by the notary, always, as well as in the Netherlands. And in the other countries, there are always methods, but you then have to look to it and to check. And then the same thing applies to transfer of mortgages. If the mortgage has been there, but it's transferred for another bank. Not in all countries, depends on if this bank really has been the holder of the mortgage. In Germany, you can rely on the register. Again, in other countries, you should verify, and in France, for example, you should verify what's at the register. In other countries, you've got to verify even more. And this is then really a change of methods. Means if you want to be sure that you are the holder, you can have those countries where you can rely on the land register, others where you need to look at the documents. Shortly going into the prior rights, which may be there. Prior rights mean other rights, other mortgages, other encumbrances, which may, of course, then diminish the value of what is left for you. Again, it's important that you know at what time your mortgage is registered, at what point in time you got the ranking. And that is the case I told you about registration. But then specific things apply. One thing we are just looking at is the particularity of common law countries, that the ranking of the mortgage does not only apply on the registration, but also on the disbursement of the mortgage. If you may have the first mortgage, but if you knew about the second one and you disbursed with that knowledge, you may be after the second mortgage with your disbursement and with that particular money. Depending on if you are very obliged to disburse that particular amount or not. There are many differences obviously between England or some countries, some US states, and we have to go into detail. This is why I just want to tell you this is how we want to ask for that now. But then, if we want to be sure that we don't have unknown prior rights, of course we can, in some countries, preserve the ranking with special entries into the register, like in Germany, not in others, like blue countries, and in some countries, like England or Spain, with a limited period of time, which of course may help and must be considered if you do a mortgage in those countries. Then the next thing is, even if you do, and you do construction finance, many countries want to protect the poor contractors, the poor people who build the property but don't get the mortgage, and if the guy who builds it runs away with the money, never get anything, but just a building, just a property with a mortgage on it. That is why many countries say, okay, they have the right to register a mortgage, but what they never do because they would be out of business then. And then, but other countries, like the red ones, say they make a registered mortgage, but be careful. That depends on the time of their performance. That means the ranking depends on the time when they have really worked on the property, which of course tells you that you should be sure that they get the money and to better give it to them directly at the bank. And then, of course, there are a lot of rights which have priority by law. Of course, because of the proceedings, if you do auction and enforcement, because of proceedings will be before you, not a real problem, property-related taxes, public burdens, that's all fine, or you think you can calculate it. Then if you come to salary claims of the employees, that's more difficult. That really those people who work on the property get money. Then very difficult would it become if the tax claims, as in Ontario, would be in a priority. So this means that your checks and audits about all what happened on the property would be extremely important. And then I make that sure. The same applies to the insolvency. In insolvency, you might have even more priorities. The insolvency administrator might take away money from what you get out of the property. And then here, this is just about the salaries of the workers. And you see there are some countries where the workers of your customer would get the full amount of their loan in insolvency. Very difficult to calculate. And other thing is, if you have to cover the cost of the insolvency proceedings, and that does not mean only the costs of enforcing the property on which you got the mortgage, but of all the other costs the insolvency administrator might create when working on the whole of the company. Which means if you got prior rights in insolvency or enforcement, you should consider that your customer should have an SPV, a special purpose vehicle where you should put the property in to make sure that you can calculate what would happen with the property and that those rights can be overseen. And this is done in commercial finance, I think, today in most cases. Then another thing we got are the large loans which must be portioned, the syndications. And this is the case because more and more we get bigger loans and banks who would do smaller loans. After the crisis, banks have seen that they should have a higher risk awareness, they should not do as much as they did before. And if they do, they should then distribute it to others. As we heard from Deutsche Bank, where they would then give it to other banks. And then the question is, how can you do it? The easiest way, of course, is you do club deals. You meet with a number of banks and everybody got his mortgage in the same ranking. This is not very flexible and customers don't like it because they don't want to talk to 6 banks. The other thing is syndication, one bank goes ahead and then would look for others. And then you could do a sub-participation. This bank can just agree with the other bank that they would have the risk of that particular part of the loan. But sub-participation has a real disadvantage because you are dependent on the other bank, and it goes always via the other bank. And if this other bank would be bankrupt, you would have lost your mortgage and your money. For many years, people regarded this not as a real risk. They thought banks would never go bankrupt. Opinions have changed, I don't know why. And today, everybody's looking that this would not happen. And even if you look to CRI, you must be sure that you've got a mortgage. And then, of course, transferring mortgages, registering everything would be really painful and costless. Bring a lot of costs. So you should look for the ways you can do it. One way, again, everybody gets his own mortgage, not very efficient. You can have certified mortgages. In many countries, you've got mortgages, security rights, which are incorporated in a certificate. And this certificate could be held by a trustee for all of the banks, a neutral trustee, so everybody got his share of the mortgage. In other countries, you got security mortgages, which represent a certain security which other banks can buy. Or in common law, you got the trust of the usual concept as a Germany, the funding register, which exists since a few years, the Finanzierungsregister. And then we have to look into each country what we should do there, and if we can do something there. One thing is, of course, how can we just transfer the loan with the mortgage to another bank, which is the case, for example, in some countries with strict legal accessoriness, which then means you can just transfer the loan and in principle they will get a mortgage. They still will not be registered, but that could work. But then what would happen if you would do this without the consent of the owner, which you typically do or want to do? You don't want to ask the owner every time. Then in some countries you got a proportional division of the loan. In other countries they would just acquire the transfer claim. So this is not very effective because then you got unproportionate relations between the banks. And in some countries, as in Spain, you actually cannot do it because only one party can have a mortgage. What can you do? You can, of course, then look if you can transfer, if you can inform the owner, which is then possible in many countries, if you have to inform the owner to really come to perfection of the transfer, which is the case in many countries. The other way, as I told you, is if you just have different mortgages, then you create a second mortgage and then agree on equal ranking. This is a case that can be done now in most countries. We have seen in the last years, in this point, a redevelopment. Many countries didn't allow to make mortgages equal ranking, to bring them to equal rank. That has changed completely, and today there are just a few exceptions, mainly in the East, where, as Ukraine and Russia, and Turkey, maybe Southeast, Northeast, where you really cannot create equal ranking between two different mortgages. Or Portugal. Other countries allow it. The question is always, have you to ask the customer, which you have to do in Germany, and which again you don't like to do. But if you don't, this may be a way to come to a relationship system where all the banks are equal. Instead, you can do it only once, and then later changes would not work. Then, of course, you can say, okay, we just don't change the register, but it's the mortgage and the secured claim are held by different persons, which, however, is not the case everywhere. In fact, it's only the case in so countries like Germany and Switzerland where you really have non-accessory rights. And of course, it brings the question: how can you be secure that some other bank has the same right? I'll skip that one and come to the question: could we just use a fiduciary relation? Fiduciary relations may be a good way to protect one party because the other bank for the mortgage and fiduciary for the other one. And we see that we have a lot of countries with fiduciary relations. We have some countries where you don't have fiduciary relations, but you have some kind of parallel debt where the fiduciary relation then is recognized by law. Very important in the Netherlands, that this is the usual method of the syndicated loan. But the other questions which we don't regard here is if that will be a solvency type. I think it would be in most countries. We can, of course, do it easier and just use the mortgage certificate. Create a mortgage certificate, let the neutral person hold it, a notary, a trustee, monitor, whatever. And then we see we got lots of countries where we got such certificates. In fact, for the purposes of syndication, we got it in France, we got it in Germany and many other countries, and in Sweden even it's still the only form for a mortgage. Last country, 4 years ago, we had Switzerland, we had Denmark, we had Norway, but all the other countries now have created other forms with the book entry. But so the way goes away from the certificated mortgage back to the really book entered mortgage. But still, many countries have it, and you can use it for the purpose of syndication. And then, this is the last question, which is a little bit the result. If the security right of movable property has registered, can you effectively syndicate it? And this is what we found out about it. And it shows that we have countries where we can do it, and other countries where it is difficult or inefficient or really cannot be done. And if you would look through all those charts, you would see that, for example, in Spain, we don't know a way. There is just, of all the ways we can imagine, there is now no way which would work. Which, of course, you have to know if you do a loan in Spain and want to bring it, to share it with other banks. You should in advance agree everything with the customer in such a way that you really later can do the changes that the customer will agree. You'll never have a chance to do it alone. And that applies as well to other countries. Yeah, okay, this is the examples I had, just a short word about what we do with all that. Of course, then if we had all those results, we wanted to know what it means to everybody. And we created an assessment system, just giving notes to every question of importance and to every answer of quality. And of course, you cannot do it from just one perspective. We have four perspectives. We have the view of the enforcement, what is good in enforcement, what is good for the flexibility, what is good from the point of the owner. Also have to look that the owner is protected with his own interest, and then the legislator will also look for the interest of third parties. This is just how it works. You just give that notes, and then you just have in the end to multiply and add the points. And then these results you can use for a lot of purposes. It's used by the European Commission sometimes if they want to know what would be good for the European regulations. Some people have used it for their countries, which are in the project, where they said, okay, look to this, and we should change the law in a certain way. And then we use it for the internal rating, particularly for the loss given default ratings, which banks have to have. You have to show that your mortgage has a certain weight in some countries. In some countries we got historical data, how many losses that you have in cases with mortgages, not in all countries. And in those countries we are using these results, combined with other indices about corruption and about the rule of law, to find a certain it fits rather good with our results. And just wanted to show it with that view. This is the perspective of enforcement. On the left side, you see the complete points, which nobody can get because you would have to give contradictional answers in many cases. And then some countries where enforcement is easier. Norway has most points, others less. And we did the same thing for flexibility and for the perspective of the owner. Very important. This is what the European Commission likes, of course. How good is the mortgage for the owner? Consumer protection. And then the complete findings from the perspective of the legislator. Yeah. Okay, we are going forward with it. We got a new IT system which allows us to give comments to the questions and answers, and to create access for other people, for our banks, to all this content. And we now base on those answers and legal monitoring on the legal developments for our banks, which we do twice a year. Yeah. Thank you very much. That was a lot.